Travis, this week let's do another episode of Quick Hits. Those are interesting stories that caught our eyes, right? And so the first one for me is the IPO market, or the initial public market, the initial public offering news. Last week, IPOs hit $6.1 billion, the highest since December of 2021. Lineage, a temperature-controlled food storage company, led the week at $4.4 billion. We generally see pickups in these IPOs when the markets are fairly high, but there are no significant IPOs expected for the month of August. It appears the IPO market just might be cooling off here a little bit because, $4.4 billion with just one company.
Yeah,
with the 6.1
that's
billion.
a big company. Lineage, and it plays into that whole infrastructure theme we've been talking about too, right? At their cold storage for food, pretty important for the company's infrastructure. Story that caught my eye this recently, Steve, has to do with U.S. federal debt. It's recently crossed $35 trillion. Okay, 27.8 trillion of that's held by the public investors, and 8.1 trillion of that's held by foreign entities. Maybe more important stat is U.S. federal debt to GDP, gross domestic product, right? That's the output of the economy, sits at about 122.55%. For context, in the year 2000, that ratio was 56.86%. Wow. And if you go back to 1980, it was 34.63%. So the questions now are, how sustainable are our current levels of debt, or the trend in our current levels of debt?
Not a good trend.
And does this impact the creditworthiness of the U.S. and the world's view? Because if it does, what are the long-term implications for interest rates? As your creditworthiness deteriorates, interest rates increase, makes our debt more expensive.
Absolutely does. There's another interesting data out on the housing market as well, Travis. The median price for a new home is $10,000 less than that for an existing one.
So I go build a house, I'm going to pay $10,000 less than if I buy the existing house in the neighborhood right now.
Yeah.
Okay.
Which, why wouldn't you if you're patient? You don't need a house right now. So that's a record discount attributed to what we call the lock-in effect. And those are just people like myself and you that have really low rates, and we're not willing to go out and get into a high interest rate environment that we are in today.
Yeah, we're not going to move and give up that low rate, but that also leads to what?
It leads to people staying in their homes, and it costs. The cost of moving is much higher, obviously, and the continued shortage of existing home sales. However, the supply of new homes is 9.3 months. It's well above the historic average.
Yeah, so we've got new homes cheaper, and we've got an excess supply in them.
Yeah.
I mean, so that's an interesting dynamic right now, Steve. So last point, obviously I have to bring it up, something about markets.
Right.
So previously unloved small cap stocks, those are smaller companies that trade publicly. They've underperformed large cap stocks this year, but they've raced 10% higher over the last 2 weeks. At the same time, the S&P 500 and the whole Mag 7 that everyone keeps an eye on is down 3%.
Yeah.
So this is what's known as a market rotation, Steve, where people move out of one area into another area. But that 13% spread between small caps and large caps is the largest 12-day outperformance by small caps ever.
Wow.
So it would have been nice to own.
Ever is a long time.
Some of those, yeah. Yeah, so this is another lesson in diversification for people out there. Think beyond, the traditional S&P 500, smaller companies, international companies. It's good to have a wide array of exposure.
Yeah, it just reduces your volatility, right? I mean, it just helps you. It helps calm the seas a little bit.
But then you can take advantage of rotations like this.
That's what I mean. Yeah, exactly. So, Travis, it's been great. I look forward to it next week.
Look forward to it as well.